Some of you guys have been asking whether the TTTM strategy works on the indices markets, and the answer is yes. So in today's video, I'm going to be showing you guys how I used the trade towards the money strategy on the indices. The very first half of this video is going to all be about just getting the trend direction, and then towards the second half of the video, we're going to get into entries, but we have to go through the very first half to be confident for the entries. So I'm here on a weekly time frame. Well, first of all, you know we're super bullish on US 500. Because we're super bullish on US 500, what do you expect to see? I've said this before in my videos, and I've said whenever price drops into a sell candle, you should expect price to run higher. This is a sell candle, and whenever price drops into a sell candle, this is where you should expect price to be bullish from. So that's number one. So we know on the weekly time frame we are very bullish, and we can also see price dropping into sell candles. This is a reason why we should be bullish from here. You can see this candlestick here, it runs the high of this candle. We're trading higher and retracing into where? Into a sell candle. And I used to be of the mindset that price had to retrace to a magic Fibonacci level. Let's just say there was a 61.8, I believe that's what it was, or 78.2, I can't remember now. I would always expect price to run down into these levels here, and oftentimes I would miss out on multiple trades because of this. But price does not need to come back down here. This is still potentially making its one expansion higher, its leg higher. So when it's ready to retrace, you can start looking at lower prices. Right now, how do you know that price is not finished pushing higher? And guess what, guys? It's left a weekly fair value gap in here. So in my eyes then, this is going to be a high probability area where price could turn around from. If price was to close beneath this, then I would expect a larger retracement. But for now, this is a high probability area where I expect price to get to for a retracement, a minor retracement before going long again. So this is that on a weekly time frame. Note this up. Just remember that this is that weekly fair value gap. Now I'm going to go down to the daily time frame. On the daily time frame now, I've put on just a few more candlesticks. Let's go ahead and put money on. Okay, there we go. I've gone forward a few days, and you can see what price is doing. Price is getting to that weekly imbalance. It's not really going nowhere, and then we explode higher. What do we then see? We see an area of inefficiency here on the daily time frame. This is where I'm going to be looking for an entry, and so there's no reason for you to think that any retracement, any large retracement is happening. This is most likely still going to be an extension up, a leg up. There's nothing that says this is going to be dropping for a deeper discounted trade. So what do we have going on now? So we've run above the previous week's high, and then we've left this fair value gap in here. So most likely then, this is where my entry is going to come from. This fair value gap over here. So that means, what can I expect to happen? I can expect price to dip down into this inefficiency before going long. But let's go forward one more day. There we go. So on Friday, we get the dip down into this fair value gap. We've gone forward one more day. We've got the dip down into our fair value gap, a daily fair value gap, by the way, which is very strong. It's a very strong POI. We've got the dip down into it. Then on Monday, we don't trade beneath Friday's low. Instead, we create a short-term low. That's a short-term low. That's a low between two high lows. That's a short-term low. Short-term lows are very powerful because when price is bullish, you don't want to see price close beneath a short-term low or even get beneath a short-term low. When it trades through a short-term low, that's normally a sign that this move most likely is not going to be happening. This next bullish play. Most likely we're going to be running out some more sell-side liquidity. Running out sell-side liquidity or cleaning up some more inefficiencies in the market. But you can see here, we dip down into our daily fair value gap after running out the high, and we create a short-term low. This is a very powerful play, and most likely price is going to be shooting up the upside. Now I'm going to move it forward one more day now to talk about my entry. We come back down one more time to this level again, to the daily imbalance, and sometimes you're going to get multiple touches at the daily inefficiency. Don't give up on that trade. Let's go down the time frame now. Let's go to the 1 hour time frame. This is the TTTM style of trading. You see, this is consolidation. Some people will be scared to trade this. And I'm not saying you should go ahead and trade this, but I'm saying, look, everything was aligning up with my POI. We want to see price dip beneath liquidity. Where is the money? The liquidity is down here. What do we like to see? I've said it and I've showed it to you in my previous video, so I'm not going to show it again. Watch my previous video if you want to understand what we're looking at now. In the Asia session, what do I want to see? I want to see price go sideways, which is this. That's that consolidation, accumulation of orders on both sides. I want to see price go sideways, accumulating orders on both sides. Look, relative triple lows down here. And then when London opens up, we create relative equal highs. So you know there's going to be money down here. But As you guys know, if I am bullish on up here, what do I want to see? I want to see price drop first before going long. Drop first, run out liquidity, potentially trade into a POI. It was already in our POI when it dropped, took out the previous day's liquidity, dropped a bit deeper into my POI, and then I want to see price expand. Before we tackle these relative equal highs and stuff like that, let's go ahead and tackle this down here. Let's go down to a lower time frame to show you guys what was going on. We have a running of liquidity, previous day's low, before an entry. And then some of you guys are probably thinking, how did you catch this entry? What did you see here that made you want to get into this trade? So let's go down to the 1 minute time frame, which is my predominant entry time frame, and look at this. This is that same level. This is the drop beneath the previous day's liquidity. Now I'm going to go in on this. At this level here, we had an imbalance created here. A fair value gap created here. When this imbalance was created here, similar color, let's go ahead and change the colors real quick. The moment price dropped into this inefficiency here, this is where I'm looking to catch an entry. I did manage to catch it just a little bit higher over here, and I put my stop loss beneath this short-term low wick because, like I said before, price shouldn't trade beneath these wicks. If it does trade beneath the wicks, then most likely we're going to be digging deeper into this imbalance or potentially running out the lows. And then I look for price to expand higher. So don't forget, so my entry came at the moment we got that dip back down into this fair value gap in here on the 1 minute time frame. This is when I looked to enter. I was in from about this high over here. It dipped back down and then we took off. This all needed to happen for me after 2:30 p.m. because at 2:30 p.m. that's the equity open. That's when the stock market opens and there's manipulation. So you can see here, look at this, around 2:30 p.m. This around 2:30, look what happens. We get that manipulation of liquidity. Manipulation of liquidity. That's when that manipulation, well, technically starts to happen around the 2:20-ish, but at 2:30, that's when it really came in and ran that money. After some of that noise had been cancelled out now, after some of the noise had taken place, all the gamblers are now being stopped out because they're all trying to just jump in and catch that high volatility. This is when I'm looking to jump in. On this candlestick here, this is 3 o'clock. This is 3 o'clock. Or 3 p.m. in the afternoon for us in the UK. This is when I'm looking to jump into that trade. So all of this, I don't need to be stressing about what happens beforehand. And so what if there was a big old drop beforehand? This wasn't my play. My play always comes in from roughly about that 3 p.m. and onwards. This is when I needed to see it. And look, bear in mind, look at this, guys. This low didn't even run out the liquidity. This low didn't even run out the liquidity. Some people were thinking, oh, but it had to run out the liquidity first. No, it was within my POI, and price can turn around like this. So this is when I expected that turnaround. And look at that, guys, we've exploded higher. When it comes to taking TP now, this is what I was interested in. There's relative equal highs here. Let's go to the 15-minute time frame. So there's relative equal highs here. You guys know this is not the be all and end all of the trade. When you see something like this, when you see relative equal highs, you have to always ask yourself, what above this high is potentially being reached for? What I'm trying to say here is when price gets to this level, yes, it's perfect. Take something off the trade. Take something off the trade. Take something off the trade because you never know. Once price runs liquidity, there is a tendency for price to turn around. And so it's not about trying to do the absolute most. No, it's not about that. It's all about trading well, just not being too greedy. Put it that way. So when price got up here now, don't forget when price is here, the moment price run above this high here, this became a down close candle. But at down close candles, you expect mitigation to take place. We had mitigation taking place. I've done videos on mitigation, so you can go ahead and watch that. And then we explode higher to run out the equal highs. And just because it's run out equal highs, it doesn't mean the trade is over. This is where I took partials on the trade and targeted some more liquidity. And this is the beauty of all of this. If you take off the bulk of your trade up here, you can let the rest of your trade, in my case, it was 20% of the trade. I've taken off 80% up here. You can let the rest of your trade continue. And then once you're comfortable, once you're happy, and then go forth and close off your whole trade. Let's go ahead and mark up this imbalance, mark up the inefficiency. And we're going to go ahead and play it a few times. So I played it a few times now. You can see this imbalance here is holding. Price hasn't even come to it, really. Let's go ahead and hit play a few more times. We're on a 50-minute time frame. You can see we've gone into the next day now. This is today. This is Wednesday. We create relative equal highs again. Relative equal highs. And you can see price is still expanding. All these imbalances here are all holding, guys. I've marked some fair value gaps here. They're all holding. Price is not dipping. Nothing's happening to these inefficiencies. And price is continuing to push up higher. Another set of equal highs. And look what price does again. Let's go to the 1 hour time frame. And I'm just going to zoom in a little bit. I'm on a 1 hour time frame, and now I'm going to go ahead and press play. And you can see price expands to the upside. Everything was bullish about this. There was nothing that's telling us that price was going to turn around. When price was doing this, expanding higher, let's move this out of the way. When price was doing all of this stuff, expanding higher here, and then we have relative equal highs, look what price is doing, guys. Price is fizzing out now. Probably on the RSI, this was literally overbought and price is going to be dropping off. Retail concept traders had that in their mind. They had that kind of idea. It didn't do that. Then to add to that, we had relative equal highs. That's another sell signal for retail concept traders that price was going to be dropping. So we had two retail concepts stacking up on each other and it still got absolutely destroyed. And then I close out the remainder of this position when price was making this wick over here. So what if price continues to rally higher? So what? We've caught your piece of the pie and you're done. Let's go ahead and put my executions on. Settings, executions. You can see right here now, guys. Look at this. I jumped in at these lows. You can see it right in here. It dropped back down to my POI, which is the daily imbalance. We had that inefficiency created down here. It took price higher. First TP, let's zoom in a bit. First TP was taken off at the equal highs. You can see right here at the relative equal highs. Don't play no games. Don't play no games. And then my final trade was closed off right here. There's nothing telling me to close off right here. But one thing that I do know is that when price makes a large move in your direction, you best take off something. Because I had already taken off something, I closed out the whole trade and you can see price is still bullish. So you can see, if I go back to that daily time frame now, when people thought this might have been consolidation, price is fizzled out, price is done out here, US 500 isn't going nowhere. Look at the move. Look at that move up higher. Everything told me that we were bullish still, hence why I was in that trade.